Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 12th of January. In his first press conference as US President-elect, Donald Trump disappointingly offered no new information on his upcoming fiscal or regulatory policies. Most of the discussion revolved around fake news and other matters that investors probably have little interest in, such as the management of his companies while president. The most noteworthy points regarding economic policy were some comments on pharmaceutical costs and border taxes. He initially said that the healthcare industry is charging very high prices for the cost of medical drugs, and that he is committed to bringing those prices down. This led to a sell-off in US equities, particularly in the pharmaceutical sector, though they recovered their losses in the following minutes to trade virtually unchanged by the end of the press conference. On protectionism and trade, the president-elect thanked car manufacturers who opted to open their plants in the US after he won the election, and warned firms in other industries that if they do not act in a similar fashion, they will face a high border tax when they try to ship their products back to the US. Perhaps due to the lack of clarity on his upcoming economic measures, like the size and composition of a potential fiscal package, the dollar tumbled against its G10 peers. We believe that the dollar could correct somewhat lower in the coming days, potentially until Trump's inauguration speech next week. However, although the dollar may continue its current slide for a while, our broader outlook with regards to the greenback has not changed. The president-elect did not reverse his spending promises, he just did not make a reference. As such, the available information on this subject remains the same as it was pre-conference. We still expect the currency to perform better than most of its G10 peers over the year, supported by the prospects of increased fiscal stimulus and higher tariffs, as well as the dynamics of monetary policy divergence. As for today's events, during the European Day, the most noteworthy indicator we get will be Sweden's CPI for December. The forecast is for both the headline and the underlying inflation rates to have risen further. In November, the headline rate rose to 1.4% year over year, hitting its highest level in more than 4.5 years. The inflation trend has been to the upside since 2015, and thus further progress is likely to be pleasant news for the Riksbank, which at its latest meeting extended the duration of its QE program by 6 months. This improvement in the CPI could diminish further the likelihood for more action by the bank in coming months and thereby bring SEK under renewed buying interest. We also get the nation's unemployment rate for December. From Germany, we get the full year GDP for 2016, and from Eurozone, we get industrial production data for November. In the US, the main event will probably be a speech by Fed Chair Yellen in Washington, D.C. The Fed chief will be addressing teachers, and so she may avoid the topic of monetary policy. Even if she does make a reference, given that we received fresh signals on the rate path recently at the December FOMC gathering, we consider it somewhat unlikely that she offers any new game-changing forward guidance so soon. We also get the nation's initial jobless claims for the week ended on the 6th of January. Besides Fed Chair Yellen, we have 5 more Fed speakers scheduled for today. Philly Fed President Harker, Chicago Fed President Evans, Atlanta Fed President Lockhart, Dallas Fed President Kaplan, and St. Louis Fed President Bullard. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.